Is the market truly ready for a massive 6% implied directional move, hinging entirely on a staggering $91 billion revenue consensus?
Hello everyone, welcome back to AI Market News.
Section 1. Wall Street's Fragile Recovery. Let's start by looking at the current state of our markets, which are presently balancing on a very fragile equilibrium. As you can see in the chart, the Nasdaq recently rallied 0.66% to 26,151 as buyers rushed back into beaten-down semiconductor stocks like AMD and Micron. The underlying mechanism here is pretty straightforward. When previously high-flying tech stocks drop significantly, value-seeking investors often view those lower prices as an attractive entry point, driving temporary waves of buying.
However, according to current market information, this tech stock rally heavily contrasts with plunging consumer confidence, which recently dropped to 89.4. That data warns all of us about deteriorating sentiment surrounding jobs and inflation. This matters because consumer spending drives the vast majority of our economic growth. Simply put, when everyday consumers feel pessimistic about their financial future, they spend less, and that directly pressures corporate earnings and overall economic expansion. The graph shows crude oil falling below $81. We're seeing fading supply fears from sanctions on Iran easing energy costs, even as new Canadian retaliatory tariffs escalate global trade tensions. Now, when oil prices drop, it usually reduces inflationary pressure across the entire economy by lowering transportation and manufacturing costs. That is a welcome relief for central banks actively trying to manage inflation. Section 2. The binary main event.
All of that recent market action is merely prologue for the critical binary catalysts arriving tonight. At 8:30 a.m. ET, we face a major dual release: the Q2 GDP second estimate and the July PCE price index, with core year-over-year PCE expected at 3.3%. So why is PCE so critical for all of us? Well, lower inflation gives the central bank the room they need to comfortably cut interest rates, which stimulates economic growth. Conversely, any upside surprise in this data mechanically strengthens the dollar against the yen. That's because higher inflation reinforces rate hike expectations, meaning global investors will flock to the higher-yielding U.S. currency. Then, right after the closing bell, Nvidia reports its quarterly earnings. This release serves as the definitive mechanism to test whether the massive capital flowing into AI infrastructure is sustaining its momentum or if it's finally plateauing. As the central engine of the current tech boom, their revenue essentially acts as a real-time health monitor for the entire artificial intelligence supply chain. Section 3. Jackson Hole and Yields. Beyond tonight's data, we must also track the ripple effects bleeding into the highly anticipated economic symposium. As you can see in the chart, the 10-year Treasury yield is currently stabilizing around 4.64%. This is a vital benchmark for all of us to watch because higher yields increase borrowing costs across the entire economy. That directly reduces future corporate profitability and heavily pressures overall equity valuations. Looking ahead to Friday at 10 a.m. ET, Fed Chair Kevin Warsh will deliver his keynote address. His known preference for letting markets tighten themselves, meaning allowing high bond yields to naturally restrict borrowing without direct central bank intervention, rather than offering explicit forward guidance, will really set our framework for understanding the upcoming September FOMC decision. Section 4. Japanese market implications. For all of us focused on Japanese markets, these U.S. events carry immediate and structural consequences. The graph shows USDJPY holding its recent levels. The structural driver behind this is the yield differential between the two nations, meaning if we see hot US PCE data, it will drive US yields up, and that widening interest rate gap pushes the dollar structurally higher against the yen as capital seeks better returns. As you can see in the chart of the Nikkei 225 Nikkei Heikin株価, Japanese stocks face a distinct push-pull dynamic. They are highly sensitive to Nvidia's tech ripple effect, but they're also bracing for the upcoming Tokyo CPI reading expected at 1.8%. This local inflation data directly impacts Bank of Japan policy, forcing investors to constantly reevaluate domestic borrowing costs against global tech momentum. Section 5. The week ahead. To properly prepare for the rest of the week, let's lock in our upcoming economic calendar for key indicators. Please mark these exact ET times. We have PCE and GDP on Wednesday morning, followed by Nvidia after the close. Moving into the latter half of the week, we watch jobless claims on Thursday and Chair Warsh's keynote on Friday morning, which lands alongside Tokyo's overnight CPI release. If PCE cooperates and Nvidia delivers, this recovery has room to run. But if either disappoints, our fragile equilibrium could break. Thanks for watching. Please subscribe and hit the like button. This video was automatically generated by Gemini Notebook AI. AI-generated content may include errors. This video does not constitute investment advice. For full details, please check the description below.